Yo guys, Leggy here and welcome to a new video. Today we're going to be talking about an update within our portfolio, so Trading 212. So I haven't made one of these for about 2 months, although we just broke the £1,800 mark. We're at £1,817.90. I've added a few individual investments which don't have a lot of capital in at the moment, although I mostly did it just to, literally for this video, I stuck like £10 in to start, just so I can explain which ones I think I'm going to buy. So the first one we've got is AMD. So what's the reasoning for this? This one absolutely just collapsed after their uh, recent earnings report. It's down 15% over the last 3 months. It's pretty mental actually. But why am I going into it after such a collapse? Because, if you go into investments just investing because of a collapse, that's not a good way. So basically what I did, um, why did I pick it? Well, basically, they're one of the main AI um, companies. If you believe in the AI narrative, I think that it'll be a good pick. Especially, I was looking at Nvidia, but Nvidia, on the other hand, has pumped massively recently, which just made me go away from it. That's why I went into AMD. I actually use AMD graphics cards as well, and it tends to pump around the time which Bitcoin does well as well. So the next one we've invested in is Coinbase. So Coinbase, it's at a very low point. I believe that obviously we're less than a year until the next Bitcoin halving now. Following the Bitcoin halving, you tend to get a real rise in Bitcoin. When Bitcoin rises, Coinbase tends to rise. They are correlated. Although I said in a different video, I think Coinbase has lost the battle for the main exchange to Binance. They've done a really good job at spreading out their services. So I think it's a good pick. Do I think it will get back to all-time highs? Unfortunately, no. I think it was really overvalued when it IPO'd, but I do think that it's got a really good potential for growth. Legal in general, so this is a high-paying dividend stock. So why did I go for this one? Well, the thing is with legal in general is that it's just literally paid out its dividends, so it crashed for that, making it the main reason why I just went into this. So the reason why legal in general dropped is, if you guys don't know, stock actually drops by approximately equivalently to the dividend paid out. So that's why that dropped, and that's why I thought it was an excellent buying opportunity, because it was at the bottom range of what has been swinging about for the last few years. So that's why for legal in general we went for that. So the next one on our list is Palantir. So Palantir is down 1.2% at the moment. I bought it yesterday after a massive dip, and if you look at the graph, it is at a absolute low at the moment. 2 years ago, it had really positive sentiment over it. Why have I gone into it? Because, as I said, buying a stock at because it's at its low never really seems to work well. But Palantir, I brought it mostly because of its machine learning and AI advancements. So they're two, as I said beforehand, I think AI will be a narrative which plays out. I think it's got really good use cases. Making Palantir a good, yeah, I think it's going to be okay. I think it's got a lot of upside. Obviously, it can collapse further. I'm going to dollar cost average. It probably means that if it shoots up, I won't make as much profit, but I'm absolutely fine with that. It limits my risk. Say it drops more. Tesla. So basically, with Tesla, it's a really confused. So everyone's really. So some people call it an automotive stock, which is obviously the most common thing to call it because it sells cars. And when people look at it purely as an automotive stock, they say it's really overvalued. I do get this, but then lots of other people class it as a tech stock because of everything else they do. And I lean towards that side, so that's why I think it's got a lot of growth. I really like Tesla as a stock, but saying that, it's got a mixed opinion, which makes it sort of risky in that opinion. Because um, will it come down to match other car stocks, automotive stocks, especially when they up their electric vehicle making, or will it, go on that run? And also, obviously, looking at previous bull runs, it doesn't give an indication of future returns, so that's what you've got to be careful of with this. But as a company, I do like Tesla, especially with their energy storage as well. I think that's a big thing. So next we've got the VHY Owl, which got down 4.34%. As you can see there, this is because it's got a high financial sector exposure, and obviously loads of banks have collapsed, but it makes it a good time to buy it. I think long term, banks always win in the end. So in the end, we're gonna be fine with it, and I'm gonna use this dip as an opportunity to buy some at a lower price. We've got a VWRL, which I accidentally missed a second ago. It's just above it at 100.67. So this one is quite tech heavy as well. It's actually got Tesla involved in it, and it's down 2.37%. As I said, if you go into a recession, tech stocks are the first ones to die, and I think that a lot of them have gone down, not die, but go down. Um, but they've done that already a lot. They will probably go down further, but not to the extent we've seen. So that's why I think it's okay to start dollar cost averaging. And then we've got the S&P 500 both there. So we've got distribution and accumulation. I'm stopped with the distribution, and we're going to start with the ACC one. This is because it basically saves fees long run, supposedly. So one for distribution just pays it into your account, and then the other one basically just reinvests it for you. So that's why we've done that. So if we go into daily dividends, it's minus 63.42, so £60, 4.71% down. Pretty much the same as the banking stocks. Every time banking happens, this does go down quite a lot. It's fine, it recovers. But would I probably recommend this pie for investors? I say probably just stick to ETFs. Especially if you really want the dividends, go for VHYL. If you aren't that bothered about the dividends, probably just go S&P 500. And I think you just be as better off as this, really. I do it because I get enjoyment out of getting the dividends, and also obviously I can make videos out, which means I can recoup some of my losses through that way. Say it does go bad, so you got to remember that. But it's a fun way to invest. Is it optimal? No. So what does that bring our total pie to? Our total within our ISA at the moment is £1,818.16, 4.16% loss. We've invested 1,897. But yeah, it's coming along nicely. You can't help the bank stocks. I just need to try and find the money to stick in and take advantage of this situation, really. I'm sure it'll dip more because it does seem this time they managed to stop the domino effect of it last time, but this time it seems like it actually could happen. Anyway, guys, I hope you guys did enjoy the video. Please leave a like and subscribe, and I'll see you guys next time. Peace.